Welcome back to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm really happy to have with me once again Richard Maybury. Hasn't been with us for several months, so it's really good to have him back. He is the publisher of U.S. and World Early Warning Report for Investors. He is the author of several entry-level common sense books on United States economics, law, and history. Richard is not only a student of history, but as someone who served in the military in the past, he has a knowledge of what drives men to war and unspeakable evil deeds against his fellow man. Richard is not a big fan of war, I can tell you that, but he does understand that it is a condition of humankind, and there's not a whole lot that we can do to stop it, unfortunately. It's just the way it is. It's Ron Paul, who we've had on the show, doing his best to try to change hearts and minds, but I would say without too much positive impact, unfortunately. But Richard is really a good friend of mine and a person that I look up to for insights into what is happening in the financial markets as well as geopolitics, so it's always really a pleasure to have him with us. Thanks for joining me again, Richard.
Thanks, Jay, and let me say congratulations on being one of the very few people in the news media that people can turn to get something other than the carefully whitewashed stuff that we normally are treated to. I think your alternate viewpoint is extremely valuable, and thank you for putting it on the air.
Wouldn't it be good if Americans these days were willing to listen to different views instead of just their own, or the ones they've been programmed to believe in the universities? Because I think our universities are gigantic propaganda machines, and I'm pretty sure you'd agree with that.
Oh, absolutely. For every university that teaches something about the system of liberty, there are probably 100 that teach strict socialism of one brand or another, and the kids come out of there thinking with socialist viewpoints and thinking that's the only viewpoint there is.
Yeah, socialism is the anti-liberty theology. Yeah. I would say it's almost a theology, and I had a professor, Dr. Weicker, who wrote a book called Worshipping the State, and he talked about it as being a religion, actually, and he said, the Constitution suggests that we're not supposed to have the government's not supposed to sponsor any religion, but in fact it does when it sponsors liberalism, socialism, which of course he believes is a religion in a sense, So anyway, I wanted to ask you about, because you wrote recently about modern monetary theory, and of course Chairman Powell has tried to back up against that a little bit after the massive amounts of money creation starting in 2008, 2009. We've had this QE, but what could you explain to our listeners what modern monetary theory is, or MMT for short, and perhaps talk a little bit about the repercussions or the impact that it's had on our economy?
As far as the effect that it's had, I think the jury's still out on that. They haven't been consciously practicing MMT until recently. They just cooked it up. I don't know, maybe last year, the year before. So there's, it's a new experiment that they're doing on us. But it actually isn't new. It's just a repackaged version of Keynesianism.
Yeah.
And what it says essentially is that as long as the consumer price index isn't climbing rapidly, then it's okay for the government to print however much money they want to print. Now, the first sticking point in that theory is that, do you trust the consumer price index?
Yeah.
Do you really think it reflects how prices are doing in the economy? And I think you have to have been born yesterday to believe it.
Richard, let me just interject. We're going to have John Williams, the economist, who I know you're familiar with, I believe, the shadow statistics. And John, of course, believes that the inflation rate is significantly higher than what the government claims it is, and he suggests because if you just use the same yardstick as we used pre-Ronald Reagan, you would get something, double or triple the CPI, or even more than that, perhaps, the CPI. So, of course, if that were really the case, we would have negative growth for the last number of maybe decades even. We wouldn't even have positive GDP. But anyway, so the government cooks up, it decides how it's going to calculate inflation on a consumer price index, and it can change it from time to time. Maybe it doesn't want to pay out so much Social Security or whatever, right? So that's the first thing you're saying. The government's definition of inflation is suspect.
Right. Now, the reason I think they came up with this new label for Keynesianism is that they are running into, or they're beginning to face probably what's called velocity, which is the speed at which money changes hands. If money changes hands quickly, it has the same effect as an increase in the money supply, and prices rise because the money is facilitating more transactions, and people are competing against each other very hard. The way it works in reverse is that if velocity falls, if people are not trading very much, if they've slowed their purchases, that has the same effect as a decrease in the money supply. It's deflationary. And the really big issue that nobody talks about is that the Federal Reserve, in fact, no part of the government has any control over that. Velocity does whatever it's going to do. It responds to fear and optimism. When people are fearful, they want cash, they stop buying things. When they're optimistic, they spend their cash, and prices go up, and it has the same effect as increase in the money supply, and the economy booms. And I think what's happened is that velocity has always been a really big problem, but in recent years, the government has become so powerful, so much more powerful, that these waves of fear and optimism are much stronger. And, the Federal Reserve can't adjust the money supply in accordance with these waves of fear and optimism, because these waves can just change overnight. They can't change the money supply overnight, so they can't respond fast enough to the money supply or to the velocity changes. So I think they have given themselves, with this modern monetary theory idea, they have given themselves to just permission to just keep on printing money. That's the only thing in which they have very much faith, is that they can pump money into the economy and make things boom for a while. And that's why I'm sure John Williams is saying the consumer price index is really fake, because they don't dare let us know that their injections of the money are driving up prices pretty seriously now. So, essentially modern monetary theory is just another branch of socialism.
Right, for sure.
It says the government should control all of our behavior, all of our economic behavior.
So I guess that makes a certain amount of sense then. If velocity is slowing down, which is, as you say, the same thing as reducing the money supply, what they're trying to do is offset declining velocity by printing more money. But here's the thing, Richard. I've seen M2 velocity, the Federal Reserve reports that I've seen, it's been in decline significantly, even though they printed a huge amount of money since 2008, 2009. Velocity has been generally in a very significant decline. And I'm wondering if that might have something to do with just the fact that a growing number of middle-class Americans are being pushed down into the lower echelons. They don't have enough money. The fear aspect, if you don't have enough money to pay your rent, put food on the table, that might be good enough reason not to spend your money recklessly, right?
Correct.
So a lot of people...
Yeah, go ahead.
No, you go ahead. Your thoughts.
The thing is, we don't know what these officials are thinking. We know these public pronouncements that they make, and we know the statistics they give us. But what are they thinking? We don't know that, and we never will know that. So probably the one thing we can be certain about their thinking, and which means we can be certain about their changes in interest rates and money supply, is that they change their minds. I would imagine they are so scared, and they are so worried about their inability to make their theories work, that all of them go from one week to the next, changing their minds about what they ought to do. And now, we're beginning to be very cognizant of the fact that the U.S. presidency is so powerful that the president all by himself can just tweet something and change the world economy. He can create a wave of fear or a wave of optimism that will change the speed at which money changes hands. And we saw a test of this just a few, I don't know what it was, a week ago or so ago, when he came out and just reversed course on the trade war and decided that instead of kissing and making up with the enemies, with Washington's enemies, that he was going to accelerate. He was going to make the trade war worse. And wham, the stock market gets hit with this wave of fear caused by that, and it falls, and billions of dollars of savings disappear just from
with
this
a simple tweet.
Yeah, I mean, who wouldn't be scared under these circumstances that a guy can just tweet a dozen words and change the world economy? It's crazy, absolutely insane. Nobody should have that kind of power. Yeah. But the president does. And I'm not just blaming Trump. All presidents have that kind of power these days. It doesn't matter who you elect. He's going to be an emperor of the world. And if you got one guy making the decisions for billions of people, those billions of people are going to be scared.
Yeah, no doubt. And so you can kind of see why, but it seems to me that this is a problem that's feeding on itself. The more they print, in that hidden inflation that we talked about takes away the purchasing power of humans, of middle-class people, shoving them down into the ranks. We have a thinning middle class and an increasing number of people at the bottom, and they're not able to be optimistic because their real-life situation doesn't allow them to be. And so you sort of have a spiraling down situation. And here's the thing, Richard, I wonder what your thoughts are on this. In 2008, 2009, like some other previous declines in the equity markets, we started to have, and the credit markets, you have a situation in which, the U.S. dollar is, more debt. It's the world's reserve currency. So there's lots of debt money out there. And when the system goes into reverse, that is when the equity markets start and the equity and the debt markets start to decline, the margin clerk calls the loan in, and people have to sell what they're able to sell, not necessarily what they want to sell. And so that can kind of feed on itself in reverse too. So do you worry, as I do at least, I'm concerned that if we start seeing a real equity meltdown again, which Michael Oliver, who was on our guest in the first segment, thinks we're due for it, if we start to see another decline like 2008, 2009, we might be looking at a real deflation or a decline at least in the price of a lot of goods and services for a while, which isn't a bad thing necessarily if you have money, but most people won't.
Right.
Any thoughts about that?
Yeah, I think what you're describing is a definite possibility, and if Mr. Trump keeps pushing his trade war, it's going to happen. Now, I think that he has been told that by his advisors. My guess is that they told him, you better have the economy looking good before the elections, or you're going to lose to the socialists. Yeah. So whatever feelings you have about tariffs and the trade war and all, you better get them out of your system right now, because if you continue with this till the end of the year, we're going to have socialists in the White House. So I think that what's going on right now is he is getting the trade war out of the system. He's playing the last moves in his game. And my guess is, I can't tell what the man's thinking, but my guess is that as we get toward the end of the year, he'll ease up and suddenly the trade war will just go away. But if it doesn't, then the forecast of a crash in the stock market and a really severe recession or depression is very plausible, because that's what trade wars tend to produce. Look back in history. The worst depression in American history in the 1930s was triggered off and made worse by a trade war, the old Smoot-Hawley tariffs that were levied back then. I mean, the man just does not know economics. That's all there is to it. Now, I have to give him credit. He did wonderfully with the reduction in the regulations and taxes, and that kicked off a really great boom. But now he thinks he understands economics because he did that, I guess, and so he's going further. And it reminds me of a World War II movie called A Bridge Too Far. The Allies extended themselves too far. They went where they shouldn't have gone, and they lost that terrible battle. It was called Operation Market Garden. What he's doing reminds me exactly of that. He's going a bridge too far. He's in territory he doesn't understand, and he is ready. Let me tell you this. This morning, I was reading the Constitution, and it's very clear. I think it's Article 9 of the main body. Mm-hmm. It clearly states that there will be no trade war between the states. The states mm-hmm. cannot levy tariffs on each other. Why would the Founding Fathers do that? Why would they put that in the Constitution? If tariffs are a good thing, why did they say you can't do it under any circumstances? Because they knew more economics than Trump knows, and they realized what would happen if the states started levying tariffs on each other. America would not be this mighty, wealthy country that's the envy of the world, or at least it was for a while. So I would urge everybody, get out your Constitution, look at that article.
Article 9.
And see there that the Founding Fathers forbade the states to levy tariffs on each other. Well, why did they do that? Because the mess that we've got right now between Washington and Beijing, and Mexico too now, is proof of what they understood. You're going to get a depression if you do that. So that's where we are right now. There's a lot of people scared to death, and justifiably so.
Well, I think you're right.
If he continues, he's going to cause so much fear. There will be a plunge in velocity like there was in the Great Depression. We're all going to be in a lot of trouble.
Well, and it's, of course, it's potentially much worse because of the amount of debt that's in the system now that wasn't there earlier, too. So right. There's one issue that we won't have time to talk about today, but I'd like to talk to you about it either privately or on the air. And that is, of course, the founders didn't have the world's reserve currency at that time. It's one theory that seems very real to me is that the U.S. had to orchestrate massive trade deficits in order to make sure that there were enough dollars flying around the world, and we got rid of our middle-class jobs. We sent manufacturing overseas, and we finance NATO. We give money to countries all the time, and all these grants, these big loans, not loans even, just pure money gifts that we give to countries around the world, probably trying to buy off the politicians. Mm-hmm. But the argument that Hugo Salinas Price has made is that, in fact, we had to hollow out the middle class and these middle class jobs. And so he sees Trump as trying to reverse that. But, of course, at this point in time, we're the leading power in the world still. We have the world's reserve currency. It's almost like pulling the rug out from underneath the thing that Trump's trying to do. Could be disastrous, I think. I think you're right about that.
Mm-hmm. Yeah, when we departed from the gold standard, boy, that was a real catastrophe.
Disastrous. Yeah, absolutely.
There's been nothing but economic chaos ever since.
Well, Richard, in your April-May issue, when you talked about MMT, You were telling people that probably the best thing to do, we can count on a massive amount of monetary debasement. And so, buy real things like real estate, fine art, antiques, raw material stocks, and so forth. So you're really seeing a debased currency. So buy things that are real, that can't lose their value as the guys print money. You said MMT was the fifth reason. With just about 2 minutes left, can you talk about, there were other four reasons previously. What were those? What were some of the other reasons anyway? What are some of the other reasons? What are some of the other damaging policies that are being put in place that require us to buy real things?
Geez, I wish you'd warned me. I can't remember what I wrote.
Well, that's okay. This is the reason people should buy Richard Maybury's early warning report. And I threw Richard a curveball, and I didn't mean to do that. I should have forewarned you. I would be in the same shape if someone asked me questions about something I wrote 2 weeks ago. So my apologies for that, Richard. But I mean, it's obviously military. I mean, we're going to be spending money like mad for the military. For one thing, we don't have the money.
Yeah.
I'm guessing probably the aging population, the amount of money that's going to have to be spent, the declining number of people in the workforce, surging number of people.
Let me point out one thing. You jogged my memory there on the military.
Sure.
The military has two jobs. One is to protect the country, and the other is to maintain Washington's global empire.
Right.
And nobody ever talks about that second one, but that's the really expensive one that takes huge amounts of mainly ships, but a lot of other stuff. Well, they don't have enough aircraft carriers to maintain the empire. Right. Now, they got enough to protect the country, no problem there, but they don't have anywhere near enough to protect the empire, to keep their control of other countries. And right now, when this idea of having a global empire came up at the end of World War II, they had 105 aircraft carriers. Now they've got 11, and most of those are so worn that about half of them are out of service at any given time.
All right, Richard, we're going to have to leave it. We're going to have to leave it go at that. We are out of time. I want to thank you so much for being with us again. Obviously, we need to have you back again. So thanks so much for your insights. Always appreciated.